Senator from North Carolina.
Thank you, Mr. President. Mr. President, I had not planned on talking on the bill we have before us right now, Senate 2155, but the other day I was listening to another member speak, and this member was talking about how this bill could threaten and possibly increase the predatory practices of people who had mobile home loans. And as a prior person who had a mobile home loan, as somebody who lived in a mobile home park, I thought I would try and speak maybe about the practical easing, what we're trying to accomplish with this bill. Truth is, I would go further on regulatory tailoring than we could. We didn't because we wanted bipartisan agreement on this bill, which we have. As a matter of fact, I want to thank the members on the Banking Committee who joined with me and other members to make sure that we kept the bill tailored enough so that we had bipartisan support. But why the mobile home? Because we get down here in the Senate and we talk facts and figures. I could talk about the fact that half of my community banks have ceased to exist in North Carolina since the crisis. I could talk about a number of people that I speak with that can't get loans, but what I thought I'd talk about is my own personal experience. As a 17-year-old, 16-year-old kid living in a trailer park working for my father who did he would do maintenance work. So a house caught on fire or some sort of insurance damage, he would work with the insurance companies to actually do the repair work, and I was his handyman when we would do these projects. We did not have a lot of money. My father didn't have a lot of cash on hand. So the way that you did it is when there was this insurance job, you'd bid on the insurance job, you'd know how much money you'd make at the end, then you'd go to a bank and you'd get what's called a 90-day note. Most of these projects were about 60, 90-day projects, and you'd go to a banker that you'd built a relationship with, and you'd ask them to trust you to get this project done. You'd show them the project you were doing, and then he'd underwrite a loan that you had to pay back in 90 days. That's why they call it a 90-day note. Today, in the post-crisis world, that virtually never happens. Today, we don't have community banks and personal banking relationships that people can rely on to get access to capital. And even worse, with all the community banks and smaller banks consolidating, ceasing to exist, there are entire areas of North Carolina. A lot of people think North Carolina is an urban state. The fact of the matter is about half our population, about 5 million people, live in rural areas. They've been hardest hit by the consolidation of banks and the ceasing to exist, these sort of lending institutions out in communities like the communities I lived in when I was 17 years old. They're just not getting the money that they need to make ends meet. What this bill is trying to do is recognize that, of course, after the financial crisis, there was a regulatory exposure that we needed to address. The problem is we simply went too far, or at least with the passing of time, we now know that we can claw back those regulations on certain banks, particularly community banks and regional banks. That's all this bill is intended to do. As a matter of fact, this bill allows the regulators to go back after those banks that are under the $250 billion threshold if they determine that the practices that they're involved in are particularly problematic, may have a systemic impact on the financial system as a whole. But what we're trying to do here is to make sure that you start seeing community banks pop up in those rural areas, in that place like I lived outside of Nashville, Tennessee. Bankers that can work with people, give them the resources they need to pay their bills. Now, even as late as just a couple of years ago, we have some folks that are speaking against the bill who said it was important for us to advance these sorts of changes. Matter of fact, one member said it's important we advance this conversation to ensure that prudential regulations for regional banks are crafted appropriately. That's what this bill does. Another member, or maybe the same member, said we all agree regional banks are not systemically important. Regional banks are the bigger banks. They'd be like a BB&T or a Fifth Third Bank. They say they're not systemically important. Well, then I guess we can all agree that the community banks, the smaller banks, aren't. That's what this bill is about. Some of the mid-sized regional banks and the community banks. We said that we need to tailor it. That's what this bipartisan bill does. We also said, another member said, I continue to believe we will not be successful in providing regulatory relief to institutions of any size if we don't have broad bipartisan consensus. That's what this bill has. We've got Democrats, and we always talk about the polar environment here and how we can get nothing done. This is a bill that has had members on the Committee on Banking that I serve join together to make sure that all we advanced out of the committee was a bipartisan consensus for regulatory relief that allows cash to flow to people who need it. Community banks, regional banks that have a more intimate relationship with people who need access to capital. That's what this bill does. And for the life of me, I can't understand why we can't all agree. And you have these discussions here where it sounds like we're doing some big bank relief. Not at all. I've got a couple of large banking institutions in North Carolina. They're going to have to continue to submit 60,000-page, 100,000-page stress test and CCAR reports to make sure that they don't create a systemic threat. This bill doesn't touch that. What this bill touches is a part of the ecosystem that is suffering. What this bill does is reduce the regulatory burden so that guy who existed back in the mid-'70s that would give my dad a loan, a 90-day note, can now do it and not have to say no because they simply can't afford to do it, either because it affects their portfolio or because they're spending so much money on regulatory relief that they have to go after the bigger loans, and it's the people at my level at that time back in the 70s who suffer. This is a bipartisan bill, it's a responsible bill, and it's a bill that's going to provide much needed relief. So I thank the members on both sides of the aisle that recognize this is a prudent bill, it's measured, and I thank Chairman Crapo for all the great work he's done to live up to his commitment to my members on the other side of the aisle to keep this tailored and to do exactly what we said we were going to do, and I look forward to its passage. Thank you, Mr. President. I yield the floor.